Um, I work for Colliers International, which is a property consulting firm based here in Brisbane. Colliers is a company that started in Australia over 30 years ago, but is now as of this year, a company that's listed on the the New York Stock Exchange and in Toronto in Canada. Now, I'm pretty excited about agriculture in general, but at the moment, the times are undoubtedly very tough. Now, with the preceding speakers speaking, Ben on the financial side and the beef and wool industry outlooks, I'd like to probably change my presentation a little bit just to sort of complement that a bit more. One of the things that we've obviously been through ups and downs, and we're on a rising trajectory, which all those speakers have discussed, particularly with commodity prices. So we've dealt with the global financial crisis, live export bans, and drought. So they've been drivers of change. And we've seen in Australia an increasing desire for investment in agriculture. And as Ben said earlier on, what is the problem with overseas investment? There's a lot of people get a bit parochial about it, but if it wasn't for overseas investment in agriculture in the last decade, particularly the last 5 years, values Australia-wide and the situation in the bush could be much worse than it is today. We don't understand what it is to have food shortages in Australia. So, we can't imagine lining up for food or riots in the street because of lack of food. The worst we've encountered is just in the last few weeks with regards to, shortages of baby food formula as a result of the increasing demand in China. Can only imagine what's going to happen in another 9 months as we can experience a baby boom in China now that they've changed the one-child policy. So we've pretty well established that the fundamentals in the beef industry, the wool industry, and the sheep meat industry are sound. And these fundamentals are what's driving the demand for agricultural land, agricultural products, and subsequently investment in Australian agriculture. And they are what determine our values. So just as a bit of an overview of where we are at the moment, this map gives us a bit of an idea on dollars per AE basis of major cattle producing regions. Obviously some of those bands are fairly broad, given the nature of some of the regions they are. There's some variation because properties can vary in terms of their land capability, whether they're breeding properties or fattening properties, whether they're how well developed they are, levels of management and infrastructure on place. So where we've come from though is we saw some graphs from the previous speakers of what's happened over the last 20 years in terms of price and growth in values of commodity. So during that time, we've seen some fairly spectacular changes in how our beef industry operates. Ben mentioned how our industry is fragmented in terms of beef producers, backgrounders, fattening capability, feedlots. Those in themselves have helped establish and shorten the opportunity for cash flow opportunities and generating a cash flow in a business and turning capital over efficiently in grazing enterprises. So we've seen the traditional operation where you run a few hundred breeders and grow out to Jap ox. That has changed. So those few hundred breeders now used to take cattle through the Jap ox could probably turn over 1,000 plus background cattle a year. So the amount of kilograms of beef produced per annum has increased, the productivity per hectare has increased, And it was those changes in the production systems in the mid-90s that we started to see, where people were trading in cattle, specialising in maximising the beef production per hectare. That drove values. Even when cattle prices were at 90 cents a kilogram, producers were making money through that era. The breeding enterprises were probably suffering more so than the trading enterprises. But there was still that ability to make money. And as we came into the 2000s, the low Australian dollar certainly helped improve beef prices, certainly, and spurred that pent-up demand from the early 90s with high interest rates, which had finally come back down to much more affordable levels. So we were going from interest rates in the late 80s and early 90s of mid-teens to low 20s per annum on loan facilities to interest rates today of about 5%. So obviously the cost of funds has certainly changed and contributed to the increase in values that we see across our pastoral regions. Back in the 90s, 80s and 90s, values in the Northern Territory, if you wanted to look at them on a dollar per acre basis, there were probably really no value at all attributed to the land. It was all in the livestock. But today, you go and buy a property in the Territory. A couple of years ago, no one wanted one. You couldn't sell them. And then suddenly last year, in the last 18 months, 2 years, we've seeing the values move probably in the order of 30% today. So a property that may have sold a couple of years ago for $500 an AE would probably now transact closer to $700, $800 an AE. And that's where the biggest arbitrage opportunity I see in the beef market. Where we're going to see the next change is that there is certainly confidence in the industry, but the general atmosphere out there on the ground, out in the bush, is that, okay, we've heard this story before, but is it real? So there is some scepticism, and they're dealing with the issues at hand of drought, struggling with how we're going to continue on, how we're going to finance these businesses with regards to restocking the properties and generating cash flows to remain there in the future. We have certainly seen a number of enterprises. Ben mentioned the Acton family. There's other instances where joint venture partnerships have certainly been established, and they've been fairly public in many instances, and others very private, because that's the thing about private equity. It is very private, so you don't know necessarily what's going on. There are businesses out there operating today that, for many intents and purposes, they've got a lot of funding behind them, but you as a next door neighbour would not even know that they had a partner. So, dealing with the aftermath, so they're concerned with the rebuilding of their production capacity, restocking if possible, and the other options. So where are they going to get capital from? The options are traditional banks, specialist livestock financiers, or the equity capital. Now, given the circumstances of many of these properties and where property values are considered to be at the moment, the banks may not have that money available given the loan-to-value ratio metrics that they work on. However, I think there is some optimism out there in that values are certainly bottomed out, and I think if anyone was looking to pick the bottom of the market, they might have actually missed it. They might only just have a smelly finger now. So the specialist livestock financiers are certainly filling in a segment of the market. We're seeing new products venturing in where banks do not have the skill or the risk appetite. And I don't want to be accused of favouritism or anything, but because I've got a friend who manages one of these, but their facilities are fairly unique. 15 years ago, when the National Livestock Identification System came out, we were sitting around having a beer and playing a couple of games of 500, and we were saying that this is going to revolutionise how Australian beef enterprises and sheep enterprises will be financed in the future. Their model works on 100% finance of acquisition price. And you go to a bank, they're not going to give you that sort of facility. They don't have the systems or the controls in place to manage that risk. So that gives primary producers options in which to how to manage their cash flow difficulties, trading stock, building up stock. Will certainly be a possibility. Equity capital and sale of property and sale of leaseback options. Now, they are certainly going to be very real options. We've, at Colliers as a firm, have been working with a couple of transactions at the moment that will result in sale and leaseback options. And this is where money turns around. An overseas investor may buy this property, and once the family will remain on that property and continue to operate it. It's been a very profitable enterprise, and it continues to. It's made positive cash flows. But their business plan is they're going to sell this, lease it back, and fund their expansion program. So they're going out to go and buy additional properties. So it's a recycling of that capital back into the rural economy. So I suppose it's how you look at how a JV partnership can be established. It's not necessarily a JV may not be an equity partner in the actual business, but they may own the land while you continue to own the operating entity. To participate in this, businesses need to have a very, very strong business plan and a suitable structure in which they're going to operate under. They have to have sound production and financial data available for due diligence. One of my biggest gripes as a valuer is you go onto a property and the landowners, justifiably proud of what they do, say how good it is. Unfortunately, they don't quite often have the data or the information available for us to support that. What was very interesting, though, is recently with some of the enterprises that I've been dealing with, we have had the opportunity, with the records that they maintained through the National Livestock Identification System and their herd monitoring, they have been able to monitor and maintain the weight gain of cattle, mobs of cattle bought from acquisition through to sale. So from that data, we can ascertain, okay, not only the carrying capacities or what numbers those properties have carried, but what weight gains those properties have achieved during that period in terms of kilograms produced. And that is what the business of grazing is about, unless you're producing wool, so I won't leave them out. Corporate approach to reporting and accountability of events and results to all investors. So even though it might be a private company, they've got to have the ability to provide reports not only to their investors, but I think regularly to their bankers, so that have that communication open at all times. So you need an alignment of objectives between existing owners and investors. And for a relationship to be sustainable, you need to add value to each other. So in the north, I think Northern Australia has so much potential that's unyet realised. We're going to see some significant improvements when the wherewithal is there. We're seeing some of those projects that started years ago start bearing fruit now. We're seeing the benefits of increased beef production through livestock waters and fencing. One of the main deterrents, or not deterrents, one of the main obstacles in the way of performance of beef producing herds in the north is their weaning rates. The lack of water improvements on properties has an impact on their ability to produce at the end of the day. The beef production system or the sheep production system is all about producing metabolisable energy that's from in the paddock into kilograms of beef meat, lamb meat or wool. Now you take away the need to having to walk 4 or 5 kilometres just to get a feed during the hard times, and you improve the chances of that of your female breeding herd to increase conception rates and weaning rates, and that is one of the main driver of production. So often you see in those northern herds where weaning rates are less than 50%, and it's just been a big impediment to their overall productive and financial performance. Ben showed what an increase in $1 could do to the financial performance. Weaning rates can have a similar impact. Now, the north has certainly got a lot of potential, but it's going to need infrastructure. Investments like the abattoir at Darwin by AACO is certainly one of those investments, and is going to be a game changer for the northern beef industry. Cold cows now have a home to go to. One of the reasons the performance of the breeding herds was that herds weren't necessarily culled based on their input back into the for fertility, so they were just put back into the herd. So, but private investment in those types of infrastructure needs government support as well. We need better roads, when we need more facilities, and to make the linkages from paddock to plate more efficient. Thank you very much.